welcome to On the Mark with Mark Papa. I'm Gary Byron. Mark is with Financial Resources Group. You can find them online at www.frplan.com. That's F as in Frank, for frplan.com. Write this phone number down, 860-657-8380. Okay, I'm going to repeat that for you. 860-657-8380. I want you to call that number. There's no obligation. There's no cost to you up front. I just need you to call it because you will obtain a wealth of information that's going to help you in both the short term and the long term with your retirement. Incidentally, you can also head on over to YouTube. This is where Mark has his own YouTube channel. And it's, you just, in the search field, just type in Mark with a K, M-A-R-K, Papa, P-A-P-P-A, 5207. I'll repeat that for you. Mark Papa, 5207. Incidentally, there's a link to his YouTube channel on his website. All right. Mark, good morning. Great to see you.
Good morning, Gary. How are you?
I'm not too shabby. I'm enjoying this, enjoying the summer. That's what I'm doing. I'm looking at you, and you've got a pretty savage tan going on there, huh?
Yeah. Well, it always starts with the first sunburn, and then it's a tan afterwards. You know.
That's very true.
I try and use my sunscreen and listen to the doctors, and now they have SPF 50. And then you're in the pool long enough, and then SPF 100, and
SPF.
Before you know it,
why bother? Why bother putting it on? Why bother going out into the sun if you're going to put that on?
I don't know. I think it's a lot of marketing, to be honest with you. But
it's all marketing.
It sure is. And here's the bottom line. You just got to protect yourself and just try and do the best you can.
Last week you mentioned you were going away for the 4th of July weekend. How was it? Where'd you go? Did you have fun?
Yeah, I was in Newport. I stayed at this place called the Newport Harbor Inn and Spa. On the put a plug in there for them on Goat Island. I left. I got there Monday, and interesting enough, left Sunday, and it was a great time. It was somewhat relaxing. Food is awesome there. The environment is great.
You brought your son with you, right?
And I brought my son. I came home, met at the Route 395 area. There's a nice little rest stop there, so I picked up my son there, and my parents brought him down, and I brought him to Newport. So I had to come back halfway back and bring him back. But he had a great time, 8 to 10 hours in the pool all day, and then, played a lot of football, and we have a lot of friends there. So it was a great time.
That's awesome. I'm happy to hear that. In fact, knowing how hard you work, listen, work hard, play harder, Yeah. Do you take work with you on vacation?
Well, not to get too deep into it, but we had of course, the first day you get to vacation, there's a crisis situation, and here I am. I'm checking into my room, and I get a crisis call, and 2 of my clients' refunds never got deposited, or they did get direct deposited, but it turned out to be the wrong account, and it was the wrong account because someone got into the system and changed the banking, so we have to do an identity theft affidavit for that. And, make sure that then the IRS is going to have to pay him. But some scammer got into the system and stole the refund.
Wow.
Yeah, real nice, isn't it?
Vulnerable.
Well, no matter how hard you try, it's they're slick. And
there's no way to foolproof this
no.
from hackers and scammers.
It was a malicious email, and they clicked the email, and it set up a third-party access to the system. And before we can file the return, they changed their bank account and stole their money.
Oh.
So we're going to get the money back, and
they're protected, though, right?
I'm going to compensate them. Yeah, not the end of the world, but it's a major inconvenience. And just like I said, do your best to protect yourself out there. And I'm looking forward to today's conversation about the hot topic of.
Yes, let's start with the big picture. The one big beautiful bill passed. In fact, it was signed right on the Independence Day, 4th of July. So I guess the obvious question we should start off with, Mark, is what are the key changes to IRAs and taxes that I think people really need to know about?
Right. So today we're going to talk about, obviously the hot topic of Roth conversions, because this is what everyone loves to talk about, to sound smart and do a Roth conversion, and you're going to pay less in taxes. Well, right now we're still paying some of the lowest tax rates we have in history in America. However, because of the way that bill, even in 2017, was structured, you really have to be careful what you do. read an article, or I'm going to convert to Roth, I'm going to do it all at once. So we're going to go over all the different scenarios today and what's the best way to convert a Roth. But the OBBB, definitely, there are some changes that I think are noteworthy, especially as it relates to Social Security taxes. So when you go to convert your IRA, obviously, if you have a lot of money, this isn't going to really apply to you. But what you are going to do is push, the more tax you pay from that IRA conversion, you're going to push your Social Security tax to the highest threshold. And that can get expensive if you're not careful. In addition, you have to watch out for the IRMA, the IRRMA, that can also increase your Medicare taxes on that conversion. So you have to be super careful what you do. Now, what I'm going to talk about today...
Just so that people know what IRMA is, the IRMAA.
Yes, sorry about
That's
that.
income-related monthly adjustment amount. There are people who, you can't assume that people know what the IRMA is.
I was going to get,
Okay.
I apologize. Sorry for the jargon. We like to be plain language here.
Right.
And OBB was the One Big Beautiful Bill Act.
Yeah.
So the main thing to talk about here is that there are new thresholds for Social Security taxation. So basically, from 2025 through 2028, and these brackets had not been changed since the first change in, I think it was 85 with Reagan, and then later on, the Senate changed it. I think it was 1990. Again, because they have to tax Social Security because ultimately they know it's eventually going to go broke. Or at least the Social Security Trust Fund is going to have more money coming out than it is coming in, which is a scary thing for anybody who's under 65 right now, or even younger. So basically, for single filers, up to 50% of Social Security benefits are taxable if combined income exceeds 38,000, and then 85% if benefits exceeds 50,000. Now, if you're married, that jumps to 44,000. 50% of Social Security benefits are taxed, and this is for, again, married over 65. And that exceeds 44,000. That used to be the top bracket. Now it's the bottom. And then up to 85% of your benefits are taxed if combined income exceeds 56,000. So that's an interesting thing. So that's changed. There's also an additional $6,000 deduction, $12,000 for joint filers, for those 65 and older, effectively reducing taxable income. So it's a funky calculation, which is why we invite people to the office to say, how is this going to impact you? Let's come on in and see what the new numbers are going to do, and how are we going to have to plan now for this year. So because of the One Big Beautiful Bill, things have changed. We want to see, does it affect you positively or does it affect you negatively? Which is why it's so important that we obviously get in front of our clients when these changes happen.
Right. I mean, wow, everything you just said, that's a lot to unpack for a lot of people listening.
Yeah, exactly.
You got higher taxes, tighter IRMA, which is the income-related monthly adjustment amount, okay, these tighter IRMA thresholds, and more taxable Social Security. It sounds like Roth conversions are more critical than ever. So let's talk strategy. You advocate for a laddered approach to Roth conversions. Well, how does that keep costs down?
Okay, so let's talk about the laddered approach. The laddered approach is something that I talked about before. Remember when I said a way to get 25% more income and pay less in taxes and lower your chance of running out of money? That was that strategy. Remember, if you made like less than $140,000 a year as a joint couple, that you start at age 60, little by little you convert a Roth. You take the difference, you invest that in something else. You pay the tax, and it spreads the taxes out over 10 years, or up until the point where you have to take. Actually, you can do it for 13 years now, because at 73.5 is when you're forced to take money out of your regular IRA. You would hope to convert your full taxable IRA before that, but it's just not always in the cards for people. Some people can't do that. Maybe you have a spouse that's high earner, one that's not married, that doesn't earn, that stays home. Maybe
true.
Both are earning a good amount of money and it's not possible. Or, one retires early and one is still working. It makes that Roth conversion expensive. So our software will spread those taxes out and show you how to avoid thresholds like the IRMA, higher tax brackets, things of that nature. So that's one strategy. And spreading it out over time isn't a bad idea, but in an up market, what happens is your IRA is growing. Plus, if you're working, you're putting money in your 401. You're just increasing your tax problem. So the most you can do, the sooner the better. on the laddered approach. So that's usually about 10 to 15 year strategy, 10 to 12 year strategy once you turn 60.
So you're talking about a lump sum a moment ago. Why is going all in on a Roth conversion without tax advisory, like the separate service that you're offering? And I know you have Glastonbury tax planners. Why is that a bad idea?
Well, I think if it's a large IRA, I think it's insane. Because some people say, well, I'll just pay the tax once, and then, it'll be done, right? So I can take my $600,000 IRA, and, I pay 37% on it. That's like a market crash. You just basically cause a market crash for yourself, and you're hoping that over a certain period of time, when you actually need, that money's going to grow back. What happens? There's no guarantee. Markets always typically over time, historically, will continue to rise. I don't predict the market at all, but when people tell you the market averages 11% a year, it's just not true. It doesn't go up 11% every single year. It's just been a historical average. We've had up years, down years, sharp downturns, great rebounds, but not technically.
Well, so then where are we right now?
Well, right now with $38 trillion in debt, most people are predicting that the market. I've seen the forward-looking returns are as low as 4%. I've seen others predict 6%. But you must, with the $37 trillion in debt that we have, you have to lower your expectations that your future outlook probably isn't going to be what you think it is in that we've seen in the past. It's just not probable. But hey, I could be wrong, and hopefully I am. But that's if you look at the market today, it's going gangbusters.
Right. Well.
So, but the bottom line is to do it in a lump sum is insane. However, if you have the right tax strategy, I have strategies, again, separate from Financial Resources Group, completely separate LLC, separate tax ID number, that are tax planning strategies. These are truly strategies that have been vetted through tax lawyers, CPAs, and also come with IRS opinion letters. They are not tax-free transactions. They're just ways to help defer your tax and spread them out over multiple years. Some of them use charitable. Some of them might be, some type of mineral that has a great tax credit on it. There's a bunch of strategies. There's probably like 20 or 30, but some of them are better than others. Some of them are better for high earners. Some of them are better for rolling over Roth, doing the Roth conversion. So we would want to sit down with folks who want to do a big Roth conversion and sit down to see which one of those strategies is best for them, because we could essentially zero out the tax on that conversion. Oh. So to do it without that and just suck it up and pay the tax and would be unscrupulous, but on so many levels unscrupulous.
I mean, it makes a lot of sense, but you've got a signature strategy, okay? The Roth blueprint, and you've said it allows people to convert to traditional IRA to a Roth. You can convert a traditional IRA to a Roth and have someone else help pay the taxes. All right, I'm a little confused. How does this all work? Because this is a little over my head here.
Well, these are the three strategies. What I'm going to do is take the lump sum strategy and combine it with the other strategy.
You can do that?
Yeah, I can do a lot of things.
Okay.
So, the whole idea here, the Roth Blueprint is new. So it's a proprietary software. I had to sign an NDA just to use it.
Oh, wow.
I'm going to be doing seminars, workshops. I am not the guy that likes to buy, $50 steak for people who want to come to my presentations. I'm just not that guy. So there's plenty of other advisors out there willing to buy you a steak. I want to help you, protect the legacy. And I want to help you put all that money back that you'd normally pay to taxes. And you can buy steaks for the next 300 years, okay, with your own money. But I'm going to be doing workshops. I'm going to be doing like Saturday morning workshops, like lunch and learns, those type of things. I'm happy to buy lunch. Lunch and learns, very interactive, proactive, casual.
One-on-one
no salesy.
lunch and learn, or is it a group of?
I'm going to probably invite, maybe whoever. If I get an RSVP of maybe 10 couples, something along those lines, 20 people, that would be awesome. But the Roth conversion blueprint is tremendous because it shows you the impact of what the Roth conversion is, and then the software will illustrate what it looks like, given a forward-looking, what it looks like by converting what you save in taxes, which is what we want to do, and then using those tax savings to reinvest for the future. Because you think about it, if you have $1 million 401k today and you're paying net effective rate of, let's say, state and federal, 28%, you don't have $1 million 401k.
No, you don't. No.
That's, $280,000 that trapped in taxes. What we can do is unlock that $280,000 for you to do better things with. Because where would you rather put that money? In your pocket, in your family's interest, and invest for you, or do we want to be, giving it to the Congress and the Senate and the U.S. government, or the state for that matter?
Yeah, well, right. Good point. Let me just do this really quick because I got a quick follow-up question here for you. Folks, you are listening to On the Mark along with Mark Papa. I'm Gary Byron. You can check them out online at Financial Resources Group. Their website is frplan.com. That's frplan.com. Write this phone number down. More importantly, I want you to call it. If you can call it at the end of the show. Because he'll be right at his phone right at the end of the show. 860-657-8380. One more time. 860-657-8380. I'm going to repeat that, both those points of contact at the end of the show as well, and talk about a couple of freebies that I know that you're giving away, and you got a $100 gift card that you're doing. You're talking about this Roth blueprint as well. But everything I'm listening to you, Mark. And it sounds innovative, actually. And so you also mentioned strategies vetted by tax attorneys, right, with IRS opinion letters to accelerate Roth conversions with minimal tax impact, if I heard you correctly. Yep. Are you allowed? Can you share more about that? Or?
Well, I can, but, ultimately the best thing to do is be able to sit down with someone and find out the specifics of their situation, because the last thing I want to do is do a one-size-fit-all solution.
Well, it's not one-size-fit-all.
Yeah,
we know that.
So, and, I can give you an example. In some cases, people who have the risk appetite and they're accredited investors, meaning they, if they're single, it's over $200,000 in income, married, $300,000, have to have over $1 million in assets net of their home, net of their property. Can do things like oil and gas drilling programs. So they're high-quality programs. They used to be a little shaky. And, they'll give you up to a 90% tax deduction so let's say you put $50,000 in, you're going to get a $40,000, well, no more than that, $45,000 tax loss in year one. So that will take $45,000 off your taxable income. So if you're Roth, the tax in the Roth conversion would be $45,000. Now you have to have money in a side bucket, right? So you can't do it all at once. So if you had money in a brokerage account, you take $45,000 and put that in an oil and gas, you get a negative $45,000 loss. Now you do your IRA conversion. Now you have a $45,000 gain against your income. Well, you can wipe it out. So that's one strategy. It's not my favorite one because it isn't for everybody. There's others, right. But I'm going to give you one example. The one that's been around a while. Oil and gas has been around a while, drilling programs, 1031 exchanges for people who want to roll real estate. That's well known. That made it through the OBBB, right? Remember we talked about earlier?
Big, beautiful bill. Yeah.
Now, the one I'm excited about, too, qualified opportunity zones, Gary, are also now back in vogue, and they're going to be extended. I don't have all the details with me today. A qualified opportunity zone would be I don't qualify for a 1031 exchange. What I can do, though, is defer my taxes in a qualified opportunity zone for 5 years. And at the end of 5 years, if I want my money out, I could pay the tax, or I can re-up and then wait another 10 years. And at the end of that 10 years, whatever that investment grows to, I get out tax-free. But it has to be in an area that is considered an opportunity zone, in areas of underprivileged, where, it's going to meet certain guidelines to where, the average person lives below the poverty level and all that. It's to help revitalize some of these economically depressed areas. And that includes rural areas, too. So the oil and gas also has a qualified opportunity zone, which I'm excited about.
If I'm understanding this correctly, all these strategies that you're mentioning allow you to convert larger amounts faster while keeping taxes low.
Exactly. So in certain cases, we can do it all at once and then spread the taxes out over, let's say, 15 or 20 years.
Right.
And it has a de minimis impact on you. But there's always a catch. There's always a caveat. So But again, not to get too deep into the weeds in the strategy, either way, that caveat's a heck of a lot better than paying the tax up front, or not doing anything at all and paying the taxes throughout your retirement, because you're going to get crushed. It's going to cost you huge amounts of money over time. If you take out $50,000 a year, you're netting $35,000 and $15,000 is going to taxes. In 10 years, you just paid $150,000 in tax. Now, what if you can put that $150,000 away, right? Even at something as simple as what was money doubles at 7%, but let's say even at 6%, in 12 years, you have $300,000 in a side account, right? So, but if you pay the tax, you'll never have that $150,000. It's gone. So now you have zero versus a potential of $300,000. What would you rather have?
Well, of course. That's impressive. That's impressive, Mark. So having IRS-backed strategies really kind of sets you apart, right?
Well, let me just say this. IRS is backing nothing, right? So they don't guarantee, so that would be wrong of me to say. I apologize if that made it in there. What I'm really saying is the IRS does not endorse any tax strategy whatsoever, but there are endorsements from IRS lawyers that write IRS. They write legal opinion
that's where
letters,
I got confused. Okay.
And then they get an IRS opinion. They get a legal opinion, and the IRS will come back to say, yes, we don't endorse or promote this, but to us, that's legal. See what I'm saying?
Okay.
We're okay with it. We're not. And if you get audited, 9 out of 10 times, these strategies, or because you did something wrong on your own. I mentioned this in the last thing. Maybe, some people get a little crazy. They're a little, they get greedy. And it's like anything. If you're only doing $8,000 miles for your business, don't put 18,000 miles. It's 8,000 miles. Log your stuff. So it is really good about the people I work with, and again, made me really comfortable. And again, this is all designed to help people convert their Roth. And I'm going to offer a free complimentary Roth blueprint for anybody that comes to my office. And that Roth blueprint, we'll do a quick intro meeting, talk about goals, get to know you. There's absolutely no sales in these meetings. Okay, so this is all about getting to know the client, getting to know what your goals are, getting to know what you want to do. Getting to know what your problem is, right? And we don't sell anything. We don't even talk solutions, like I mentioned before, for like 3 meetings down the road, because it's a process. We really need to get to know you so we can come up with a specific strategy on that Roth blueprint. So if you want to come in for the Roth blueprint, come on in and we'll show you a way. You bring us.
Somebody listening to this, though, could be skeptical, Mark. They could say, well, how are you getting paid then? Or what's in it for you? You're going to sit down with me for all these meetings and you're helping me in all these different ways and you're taking the time to get to know me. How do you make money then? How are you able to do this?
Well, I mean, we make money when clients become, people become clients. And a lot of times, I would say more than often, half the people who come through my door need somewhat service in some level, typically become a client. I'd say the other half don't need my services. And, or we might just want to help them fix a few things. Or there's a wrinkle here, a wrinkle there. I'll give you a great example. I had a guy come in. I'm not sure nothing went wrong in the meeting. It's just that he was not at a point where he can do anything right now. He was still working. Uh-huh. We found out his IRA, or he didn't have in-service distributions. He wanted to move it right away. He wanted to do business with me on the spot. I said, call your company. Let them know if you can move the money, great. If not, let's wait till you can officially retire, and we can actually do something then. There's no rush on this, okay? I said, get me a... Now, unfortunately, he had a custodian we couldn't work with. So long story short, I said, when the time is right, take your time. When you're ready, give me a call back, whether it's 6 months from now, a year from now. Come on back in, and we'll see what we can do for you. But, I wasn't, upset about it. We went through the process. It is what it is. So we're not in any hurry. But we get paid when clients become clients. When we're very fair, we're transparent. We're a registered investment advisor. So you might hear Ken Fisher, we make money when you make money. Our interests are aligned. We're a fiduciary, blah, blah, blah. But they are offering more services, so I have nothing against Ken Fisher. But, when you become a client of ours, we're also complimentary. We do estate planning, too. So we have an estate planning firm that's linked to us, that's licensed in all 50 states. And if you're a current client, by the way, this is the thing I'm going to be offering. I'm going to be giving all your kids a free will or a living trust. They're getting married, they're going to weddings.
That's a incredible value right there.
Incredible value. So if you're a client of ours, your kids are going to get free estate planning.
All right.
But, not to get off topic here.
I've got about 2 minutes.
The biggest thing is to give me a call to get your Roth Blueprint. And if you're not interested in the Roth Blueprint, give me a call. And what I will do is send you an invite to when I do that Lunch and Learn. You can come to the Lunch and Learn. And I am going to be doing a presentation. I still have to learn it. But we'll, and we'll do a presentation. And we'll sit down, and then after that presentation, if you want to come in, we can do the Roth Blueprint then, get to know me a little bit, and then that's it. I mean, I'm not desperate for business. What I'm desperate is to help the people who are trapped in these taxable accounts, help the people who I know aren't getting the service or advice that we're offering. That's what I'm desperate to do.
How does someone get that $100 gift card?
I'm at the point in my career I'm desperate to help people. Not because I need the money.
I got to wrap up, but I have to ask about the $100 gift card.
$100 gift card is for the folks who want to come in and do the full checklist review.
Okay.
Also, we can do the Roth Blueprint at the same time. The full checklist review is what we should be doing.
A couple of freebies there.
I mean, we want to talk about. Remember that 3 Little Pigs test we talked about?
Was that last week or 2 weeks ago? Yeah.
Yeah, last week or 2 weeks ago. We want to talk about that. It's super important that we take care of things like making sure your power of attorney works, knowing that your power of attorney doesn't work with Social Security, understanding that your power of attorney doesn't work with Medicare, scrubbing through your home insurance to make sure there aren't exclusions or something got changed to where the insurance company's only going to pay a third of what you thought they were going to pay because they pay the depreciated value versus the full value. So these are all the little things that we like to cover.
Okay. Folks, this sounds appealing to you, and I can't see how it wouldn't. Simply contact Mark Papa over at Financial Resources Group. It's very easy to do that. 860-657-8380. 860-657-8380 online at www.frplan.com. frplan.com. And there's a link that'll take you to on his website, it'll take you to his YouTube channel. Or if you go to YouTube on your own, just simply type in the search field Mark Papa. That's MarkPappa 5207. For Mark Papa, I'm Gary Byron. Thank you so much for listening to On the Mark. Until next Saturday morning, have a good one, everybody. So long.